Hello, my name is Benjamin Z. Miller, and I am the managing director of Alamo Mortgage Holdings. Alamo Mortgage Holdings is a company that can pay you a long-term passive income when you purchase our corporate income bonds. We're a United Kingdom company, and we invest into purchasing American mortgage debt. I'm going to go through a presentation here and show how our program works, and then if you're interested, you can just email me, ben.miller@alamomortgageholdings.co.uk. Okay, so first there's a disclaimer. As accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before actually investing. Okay, so this is a chart here that shows the long-term history of the British pound sterling versus the US dollar. If you're a UK investor, you have noticed how your British pounds buy less when you travel abroad. Well, if you look at the long-term history ever since the Bretton Woods Agreement back in 1945, one British pound sterling would buy approximately $4 American. And now over the decades, the pound has lost so much value that as of the 1st of January 2023, one British pound would only buy $1.21 US. So tremendous loss in purchasing power. And it's a concern if you have the majority of your holdings in British pounds. It might make sense to think about currency diversification. And that's something that Alamo Mortgage Holdings can help you with. We can sell you a bond denominated in either British pounds or in US dollars that pays passive income to you. And we don't make any money on the exchange rate. We do what you want with it. If you want to convert out of British pounds to US dollars, we do that for you at the listed rate, and we make zero on the conversion. We just do it as a convenience because some investors are concerned. Or if you're the opposite, if you think the pound is going to come roaring back, you can just stay in British pounds. Or if you're not sure, you can do half and half. So we have a lot of options to accommodate you. So we purchase mortgage notes, and there's a few factors that drive the value of the mortgage note. We can discuss those in more detail if you're interested. But in general, the 6 factors that are important in pricing a mortgage note when you're going to purchase one is you need information on the buyer. You need information on the collateral. What is that's backing the debt? You need to look at how much the buyer put down, the down payment. You need to look at the actual terms, the interest rate and how many years it's to be paid. You need to look at the history of payments. Is there a history of payments, or is it a new note and you don't even have a history? And you need to look at the paperwork. Was the paperwork done right? These factors are so important. So here's an example. This is a property that's in Sweetwater, Texas. It's not a property in our portfolio, but it's a real property. They were asking $120,000 for it. And now I want you to imagine the creation of a note. So what I'm describing has not happened. I'm describing a scenario. Imagine that a buyer approached that seller and said, I can't get a bank mortgage, but I would like to buy your house. I have $20,000 in cash. Please loan me the other $100,000. And I'll guarantee I'll pay you, or you can take the house. So they worked out a deal. They agreed on a 10% rate of interest, monthly payments of $877 per month. And now imagine that 5 years have passed and the debt, that buyer has made good payments. They've been a good buyer. They've paid that seller every month without fail. He's collected 60 payments. The unpaid balance on that $100,000 note, it has declined to $96,574. Now imagine that note owner, that seller, needs cash or wants cash. He now is in a situation where he wants to sell that note for cash, and he contacts a company like Alamo Mortgage Holdings and says, hey, I'd like to sell this note. Will you pay $96,574 for it? And then there's a conversation. Let's imagine that the agreed upon purchase price is $83,322, which makes the deal even better, because even though the note's a 10% rate of interest, the yield on it, since it's being purchased at a discount, has increased to 12% if the price is $83,322. So these are the things that Alamo Mortgage Holdings does so that we can pay you very high rates of return. And sometimes I'm asked by people, well, why should I buy bonds? You know, there's inflation, and inflation, it makes everything worthless. And, you know, they're printing so much money. Why should I buy bonds? Well, that is a good question. Rather than giving my opinion, I'm going to talk about a Nobel Prize winning economist, Harry Markowitz. And if any of you have accounts at BlackRock or Merrill Lynch or Bank of America or Barclays or any of these big banks, they just love this modern portfolio theory that was created many years ago by Harry Markowitz. He's kind of the grandfather of that theory. And they can do all sorts of fancy math and they can show how smart they are. But it's interesting because Harry Markowitz, even though he created all this, all based on a lot of fancy math, when it came to his own portfolio, he didn't use it. What he did instead was he would divide his portfolio 50% into stocks and 50% into bonds, and then once a year he would make an adjustment. If the stocks had gone up in value, he would sell stocks and he would buy more bonds. If the stocks had gone down in value, he would sell bonds and then buy more stocks. And once a year, he would make an adjustment. Now, I'm not saying that you should do that, folks. I'm just saying, why don't you think about what percentage of your portfolio is in bonds? It might be worth considering, because I see a lot of portfolios that they shove everything in the latest fad cryptocurrency coin. They want to get their hand burned on that cryptocurrency stove. They want to find out that, yes, Bitcoin can go down. Yes, King Shiba can go down. Yes, all of Ethereum can go down. They insist on doing this, whereas bond is a classic. Bond is a long-term passive income, and that cryptocurrency doesn't pay any income. Why Texas? Why do we buy in Texas? Well, the reason is Texas is a state that is winning. The prices of real estate are going higher in Texas, and that's good for us since our assets are backed by real estate. So the more the value goes up, the better it is for Alamo and the better it is for the Alamo bondholders. What are the advantages to you of buying the bond? First, you can reach your passive income goals more quickly. We put you on an annual investment program. We work with you. You tell us how much passive income you want to achieve in retirement. And then we will, and how many years you have. And then we work out an annual investment program so you can build up to that passive income level. And that way you don't have to depend on a government pension. You don't have to count on all of that. You don't have to. And you'll have extra income. And if you don't need the extra income, you can do whatever you want with it. But at least you've built something. I see a lot of dentists in particular where they think that the sale of their practice is going to solve all of their problems because they may have paid an expert to tell them how valuable their practice is. And they paid a lot of money to an expert to go in and value their practice. And the expert wrote a big report that showed them how the practice was worth so many £1 million sterling. But then when they go out and try to sell the practice, they don't get that. And instead, what they get is a young dentist that is willing to buy it, but that doesn't have a lot of cash. And the young dentist asks them to finance it. So the older, more senior dentist, he agrees to do it because he has a good feeling. And, you know, but if that young dentist can't run your practice as well, you could very well end up in a rough situation there. So it's a good idea to have passive income. We also offer diversification. It is so important in investing to have a well-diversified portfolio. We don't charge our investors any fees, and I can't tell you how many times I've heard people talk about their index fund. They are in love with their index fund, where they talk about how they buy these index funds and it's a low-fee fund. They're charging them less than 1% on that. Well, folks, 0% is less than 1%. So if you don't like to pay fees, buying an Alamo Mortgage Holdings bond allows you to avoid paying even index fees. Interest payment flexibility. We can work with you however you want to get the interest. We've got a great team. I'm an experienced businessman. Members of our team have worked with clients, including Microsoft, Chevron, Exxon, Eventbrite, and Fora Financial. We've got Marina Zaharelska. She's our international investment coordinator. She speaks several languages. She's so talented. We have Scott Wynn, who's an industry expert. He's got years of experience in the mortgage business in Texas. We've got Fred Hobbs, who's the director of mortgage servicing. He's a licensed mortgage originator in Texas and years of experience. David Jones is our in-house legal counsel, years of experience in the mortgage and the legal real estate area in Texas. Mark DeRuyter, who is very talented. He's our chief technical officer. He's written a lot of mortgage software. We have Andrew Richings in the UK, who's a consultant. He's also the founder of Thomas Kelly Holdings, a boutique private consultancy firm. Why invest in the notes? Well, if you want an above average return, you need to come to Alamo Mortgage Holdings. That's what we're providing. How long term is the note? 3 years, 5 years, all the way up to 50 years. Can you put the notes into your SIP, your self-invested personal pension? That's actually up to your provider, but I see no reason they wouldn't approve it. What type of an investment is it? You're buying a corporate income bond. Is it a regulated product? No, and that's part of the reason we can pay so much more. We have thought about getting the product regulated, and at some point we may do that. But right now we think that our investors would rather have the higher rate of return instead of going through the extra expense of regulation. Who can invest? A charity, a trust, accredited investor, sophisticated investor, come one, come all. How's the money protected? We have multiple layers of security, and we can go over that on a one-on-one call. Can you invest through a company? Yes. So how's the tax managed? It's simple. We pay all the money to you. We don't take anything out for taxes. Are there any limits? No, there's no limits. We can accommodate large placements. Can you get access to the money early? No, this is a product that's not designed like a day trading thing where you can click a mouse and get your money back. This is a product that pays a far higher rate of return over a long period of time. But that's better in most cases than that day trading, where they've done studies that 99% of the people that try to trade on news, they end up losing money. How will I receive the interest? We just pay it to the bank account you nominate. How do you invest? Just reach out to me. Send an email to ben.miller at alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.